Welcome back to Quantreef.com. Bitcoin sitting right at 63,635, parked almost exactly on a key Fibonacci level, which makes this a genuinely interesting spot. We'll walk through liquidity, support and resistance, VWAP, the Fibonacci swing, fair value gaps, positioning, and where this likely goes over the next several hours. Price at 63,635 is trading above session VWAP at 63,450 and sitting between the two anchored VWAPs, 63,133 from the swing low and 63,763 from the swing high. That's acceptance inside value, not a breakout. Momentum reads neutral here, trend and structure is the strongest layer at 62, but statistical volatility and Fibonacci location are both weak, so neither side has real control yet. The heat map itself isn't showing a clean dominant wall right now, but stop hunt risk on this structure is flagged high, which tells you resting orders are thin and price can wick through levels quickly in either direction before snapping back. That's consistent with a market compressed near value. Sharp probes toward liquidity clusters above and below are more likely than a slow grind, and reversals off those wicks tend to be violent. On the panel, resistance above starts with target 1 at 64,283, then target 2 at 65,366, then target 3 at 66,446. Below, support sits at the 1H swing low, 63,317, with the stop loss level down at 62,960. Given price is hugging the underside of resistance, a test of the 1H swing low first looks slightly more likely, and a clean break of 62,960 would invalidate the current balance red. Above, there's an unfilled for H bearish gap between 64,354 and 64,959, already a quarter filled and acting as a magnet given its close proximity. Further out sit two untouched daily gaps near 67,500 and 71,400, longer-term targets. Below, a for H bullish gap from 63,140 to 63,429 is nearly half filled. Price is basically sitting on the 0.618 retracement at 63,667, so that level is more likely to get reacted to first than the gaps. The grade reads watch, with an end score of 78, decent readiness but still short of a high conviction setup. Trend and structure and the macro and rotation layers are carrying the score, while statistical volatility, volume and liquidity, and Fibonacci location are dragging it down. On the tape, 4-hour taker flow shows 58% short volume against 42% long, meaning shorts have been more aggressive, and that's the side more exposed if price squeezes higher. With shorts leaning harder on the taker side and price coiled right at the 0.618, a push toward the 64,283 to 65,366 resistance zone would likely squeeze that short positioning before sellers reload. If buyers fail there, the for H bull gap near 63,140 and the 62,960 stop level become the downside magnet instead. Reach odds actually favor the long pool slightly, 23% over 24 hours versus 0 for the short pool at 65,805. Bullish case, hold above 63,317, target 63,617 and 63,750, invalidated below 62,960. Bearish case, reject the fib and fill the for H gap, invalidated back above 63,750. So we're sitting right at a decision point, and whichever side actually takes the next liquidity pool probably defines the next rail move. If this kind of breakdown helps, drop a like and subscribe. Quantreef.com runs this same 9-layer grading, probability, and liquidity read across over 100 coins, and there's a 7-day trial if you want to dig deeper. This is for educational purposes only, not financial advice.